Traders at Axis Bank expect a weak appetite for bonds to persist as the market remains bearish ahead of next week's MPC meeting. On the T-bill side, demand is skewed to the long end of the curve. Senator Audu, Treasury team member, Axis Bank, joins me now for more market updates. Senator, thank you for joining us today.
Thanks for having me, Esther.
Bring us up to speed on the trading at the different market segments. Let's start with liquidity levels of the market.
Okay, so for the money market, we've seen a significant improvement in liquidity levels. Monday last week, we saw liquidity figures close at a negative balance of 2.3 trillion. Yesterday, however, we saw a significant improvement to a positive balance of 126 billion. So this has led to an improvement or a significant reduction in the OPR, which is the open repo rate. We saw that rate decline from 31% last week, Monday, to 28% this week. This has spurred a slight bullish sentiment across the fixed income market. On the Treasury bill side, we've seen that the long end of the curve has traded on the bullish note. So for color of the there was an auction on the NTB side last week. We saw the 364-day bill close at 21.12%. We've however seen this bill trade to as low as 18.5% this week. On the bond side, there was an auction on Monday. There were 3 bonds on offer: the 2027s, the 2031s, and the 2034s. The 2027s closed at 19.94%. The 2031s closed at 20%, while the 2034s closed at 20.45%. All 3 bonds are now trading at lower levels by about an average of 20 to 30 bips from where they closed at the auction, and largely attributable to that spike we've seen in liquidity levels.
Right, and I know that investors will probably be trading going forward a little bit cautiously, just waiting to see the outcome of the MPC meeting that's coming up. But what are your thoughts in terms of what market expectations are? And if we do see, hypothetically speaking, if we do see a hike in rates, what does that mean for yields as they are right now in the market?
So we expect the Monetary Policy Committee to maintain its hawkish stance. So at the last meeting, we saw almost all parameters adjusted. We saw the MPR increase by 400 basis points from 18.75% to 22.75%. We saw the CRR increase significantly from 32.5% to 45%. We do expect that at the meeting holding on Monday and Tuesday, the MPC will maintain its hawkish stance, largely because we saw a marked increase in inflation. So we saw inflation figures released on Friday. So inflation figures go to as high as 31.7%, up from 29.9%. This was largely spurred by food inflation. We closed at as high as about 37.92%. So we do expect the MPC to make a statement at the meeting to try to arrest this. We, however, don't expect the moves to be as aggressive as they were at the last auction. We don't expect the move in MPR to be as high as 400 basis points. We do expect an upward move, but nothing too significant. With regards to your question regarding how it will affect the market participants already expect the MPC to take this hawkish stance, so we don't expect too much jitters in the market. We, however, expect market participants to adjust some of their expectations in line with what the MPC does do. So we expect rates to remain on the higher side, particularly across the NTB and bond curves, and we expect liquidity levels to remain relatively low in line with the CBN's mandate.
Well, speaking about, the CBN, just looking at the inflation moving further up, over 31%. Now, we know that CBN has been issuing OMO bills to bring in more dollars, attract FPIs into the country. And speaking to analysts in the last couple of weeks since that decision was taken, this was supposed to be the strategy is supposed to be short term. And at some point, the CBN will have to pull back because it does come at a cost. But now that we're seeing, negative real return, that gap is still, widening further. Do you think that the CBN may take this strategy a little longer beyond the short term?
Yes and no. So we have seen some benefits from the CBN's move to aggressively raise rates. So as rightly said, we've seen rates on the OMO bills rise to as high as 21.5%. Rates on Treasury bills have risen as well to north of 21%. This has led to increased inflows of dollars into the market, as we have seen in the NFX rate. We saw an appreciation yesterday to 1,583 naira and 54 kobo, That's a depreciation from about 1,597 naira levels. So we have seen some of these initiatives yield fruit, particularly on the FX side. The CBN on its own part has consistently intervened. We saw an intervention earlier this week, and we do expect that we'll see those interventions from time to time. So with regards to the question about whether we do see the CBN maintaining its effort to raise rates on the long end, we do expect that we would see some of that happen, but we expect to see a reduction, a moderate reduction, particularly in the near term, as we begin to reap the benefits of the previous hikes.